Hello everyone. There is a lot of news right now about a 40% crash that is incoming literally now, any day, any moment, and we're on the brink of a total collapse. So let's examine what it is and let's have a look at all the data and see whether it's actually the case or it's all total bullcrap. So let's have a look because these news are ramping up and these rumors and this FUD. So a lot of people are talking about this right now. So let's just jump in. And we were saying in terms of Bitcoin, I actually showed this to you. We're going to start with TA today, and then we're going to move on to the actual explanations as to the reasons why the price is moving the way it's moving. So we actually had this 100 moving average, I believe. We retested it, and look how well we've bounced off of this area that I've been talking about. So it's absolutely beautiful. But now we're standing at this resistance of 65K, the one that I actually spoke about. A lot of people are saying, oh, technical analysis doesn't work. If you don't know how to use one, it doesn't mean it doesn't work, buddy. So right here, we retested it just perfectly. But the reason why we actually dumped from here, it's not just technical. It is also quite fundamental. That's why there is a lot of FUD right now. Let me explain what FUD it is. First, let's have a look at Ethereum. And Ethereum is not doing as well, so therefore my challenge from 1 million to 10 million is stagnating to the side. Literally to the side with a loss of like 10%, like 100K down. But we've accumulated a lot of coins, so time and patience is of the essence, and the perseverance is the power of all the mighty traders in the diamond hands. So I'm not worried about it. So for now, in terms of ETH, there's not much to see. I mean, the same resistance, 3,400, the same support, 2,800, nothing interesting. But when it comes to Bitcoin now, if we pass this area of 65K, then the next area is 67K, and we would probably break it. And if we do, then this is going to be opening up the road to the all-time high yet again. But are we going to do so? Well, let's first examine the reasons why did this small dump happen from 65K, and then examine exactly what is happening in terms of this 40% crash that not everybody, but a lot of people are waiting for it to happen in the next literally any day, any minute. So, and certainly guys, remember, I'm trading over on Bybit, and with my exclusive link down in the description of this video, you can claim up to, seriously claim up to $30,000 initial deposit bonuses. You just need to visit the reward center after you create the account using my link, and after depositing your funds. And also you can take a look, you have other bonuses here on the screen for you, so check them out. And there are all the requirements for the deposit bonuses you can see on the screen, and also you can see them basically once you use my link to sign up. So this is something that you can use. I mean, it's not about the bonuses with Bybit, it's also about it being really huge, really convenient, and really doesn't have any stupid FUD about it. So therefore, yeah, so check it out and use these bonuses to your advantage. So now let's get to the topic as to the reason why we had this small dump. The reason is very simple. It is again Gary Gensler. It is again SEC coming out and doing something stupid. So cryptos dump after Robinhood, this big stockbroker in the United States, very popular one. Robinhood reveals that SEC Wells notice was issued to them related to its crypto listings. It's like, it's so stupid. It's just as stupid as issuing a Wells notice to MetaMask and saying that it's an exchange when it's a wallet. So, I don't know, SEC has just lost its mind. Tell me in the comments, lost its mind if you think that SEC has lost its mind and Gary Gensler needs to retire. See you later. Because this right here, I mean, Robinhood, they've actually removed a lot of the tokens that were on the platform, as you might remember, because of SEC classifying them as securities. And now they're serving them as with Wells notice. Like, come on, bro, like, stop it. So anyway, therefore, and this is actually what caused it. I mean, Robinhood's shares dropped quite a bit, a few percent, and because of this, crypto dropped a bit and created this micro cascading liquidation, which there were quite a bit of liquidations right here of longs because people are playing too much with leverage. So yeah, and but so therefore, I think that this is not really that big of a deal, and I'm pretty sure the price is going to recover faster than we can say hello, or than we can say Gary Gensler. So I'm not worried about this, especially considering that yesterday we also saw a nice inflow into the ETFs, and Grayscale, look at it, it actually also puts in another positive day in terms of inflows. Not bad. And I think this is Fidelity, is also 100 million, the second 100 million day. Not bad. And right here, this is ARK. Yeah, ARK, well, not bad. So therefore, we have some buying pressure. And also, again, if we're going to just 71K, we're going to have much more liquidations, now almost like 10 billion, than 4 billion if we go to 52K. So kind of the market, it makes sense for it to go a bit higher to liquidate some of the shorts, just in general. Now let's get to the topic of the 40% crash. And there is a reason why I wanted to address this. This got nothing to do with crypto, but certainly it would affect crypto. This has got a lot to do with the stock market. So there is a direct comparison of the crash in 1987 versus what we were seeing right now. Somebody found this, kind of very big similarity, and if you look at it, I mean, it is awfully similar. Like, look at this price action in 87, this consolidation, this pattern, we have this pattern right here, then we have this micro double top, we also have this micro double top here, and this is kind of a dead cat bounce, whatever you call it, and then the actual crash of like 30%. So this would actually put us at like, I don't know, 3,000 on S&P 500, and this, if this were to happen, I mean, it would be quite devastating. I think Bitcoin short term would also go down probably to like maybe 45K, 50K, something of that, maybe wick to 47, very possible. But I mean, for one, it would recover very fast. And number two, what in my opinion would happen here is if we were to say this is kind of a crash in S&P 500 now, we would see a lot of banks failing, which they already are failing. It's like the Fed is barely keeping them alive, and FDIC. So therefore, if this were to happen, this would actually be good long-term for Bitcoin. And we've seen Bitcoin pump whenever banks were failing. I mean, go into the recent history. Simple, my friend. So therefore, is this really bad? I don't think so. I mean, short-term correction, yes, but this would be this parabolic, incredible, steroid type of crash that you can use for building generational wealth, because it would recover in a V-shaped formation, just like we've seen this crash here also recover in V-shaped formation. The same thing during the 2020 we've seen, so the same thing, the same logic. But will this happen? No. There's a reason why I wanted to bring this up. Certainly it's possible. I don't have a crystal ball, so if you believe in this, you might as well short everything with all you've got. But in my opinion, there is one slight difference. Yes, we have the pattern similarities. I mean, it is awfully similar. Like, I mean, it's eerily similar, let's be honest, to 87. However, there is one difference. And the difference between 2024 and 1987, it is the amount of money on the sidelines. We didn't have the crazy money printing and crazy liquidity on the side in 1987. So therefore, when this crash came, the reason why all these huge crashes usually happen, and this has changed in 2008, is because when we have so much money on the sidelines, right, like we do now, the crashes stop being so monumental because there is money that is simply supporting the price. There's just too much money. And this is what Ron Paul has been saying for a long time, that why even Michael Burry is kind of wrong this time, because things have changed very much in 2008. And the amount of money printing right now and inflation, which is kind of bad from one hand, but from the other, it's actually good for the markets. Everything is going up because there's so much money on the sides. So therefore, these two pictures, even though they're eerily similar technically, fundamentally and macro-wise, they're extremely different. So therefore, it's anybody's guess. But for me, even if this does happen and if it does crash, I'll be going all in. This would be true all in, not just the clickbait title all in. It would be the real all in. But for now, I'm just expecting, well, unless this happens, we're just expecting to break above 65, test 67, or at the worst case scenario, honestly, right now, if something bad were to happen or something small, maybe some more FUD from Middle East, maybe we can just retest and just kick out some longs that have been piling up from here, and then basically down to maybe same 56, 60K area, and then bounce off of it, maybe consolidate and slowly create a grind up. So these are my current expectations, guys and girls. Check out this quick tutorial as to how to trade Bitcoin and other cryptocurrencies with proper risk and money management. Remember about Bybit bonuses down in the description of this video. You're going to need those anyway, so go claim them. And as always, peace and love. Thomas Krallo. Stay smart, stay very rich, and I'll see you in the next video. Bye-bye.